Hey folks, welcome back. This is 3 at 3. Sorry, up on the jet yesterday, we weren't able to get enough connectivity to be able to send you 3 at 3. So we'll actually give you a little more today. So thanks for joining us again, as usual. Please tell a friend. 3 at 3 is unusual option activity that we have found, large blocks of calls or puts that are being traded on the offer. And again, the reason we follow those is that the majority of people who think they have either time critical information or information that's market moving are going to get a leveraged bet on the table. They don't just want to collect a little bit for selling an out of the money put if something's bullish. They want to buy a call and have that call go from 2x, 3x, 4x, 10x. And we've seen plenty of examples of that. So that's what we're looking for. That's what we follow. Let's get started with today's 3 at 3. Just giving you a little update on that Nike. I did it on Twitter yesterday, but because this one was such a big winner from Monday, both on the halftime report as well as to our subscribers, as you can see, we had a potpourri, a whole bunch of puts that were being bought. 4,500 of those 100 puts, the 105 puts, the 105 puts again a week further out into the future, the 95, 90, and so forth and so on. And at that time, I think Nike was around $111 a share. We bought the 110 puts. We exited all of our puts as of today. Yesterday, we were out of 75% of those puts. They exploded. They were like those 3x sort of things that you love because the puts went up dramatically. Puts we sold against them, more or less worthless, with Nike today at around 103. So a nice $8 drop in the stock. If you had shorted 1,000 shares, not that I'm telling you to do that, but if you had done that into earnings and it dropped down to 103, well, congratulations. You made $8,000 on that. And you had a heck of a lot of risk to the upside, and you had to have a lot of money in your account. You had to have in the neighborhood of $55,000 on that, because of course your broker makes you put up additional cash since you're in there shorting the stock, just like when you buy the stock. But if you buy an option and that option doubles or triples, you have a lot more control of your destiny. You know exactly how much risk you're taking. If the stock had jumped to 120, you know you're not going to lose $9, but that stock short would lose $9 from 111 to 120. And yet the options, well, maybe they lose $3 on that same move. So you get the idea. I think a much safer, better way to play in the markets. Speaking of both learning and playing, RebelCon 2022. It will be in Dallas, Texas. Dallas at the Four Seasons Hotel in Las Colinas. We're going to have, when I say playing, we're going to have golf. We're going to have barbecue. We're going to have armadillo races. But that's not what most of you are coming for, but you certainly might enjoy those events after a day of strenuous listening and applying strategies, which we will have 2 days of live trading, as well as coaches and mentors on site to help you understand more about trading options, being a more effective chartist as well, because we've got one of the best in the biz, AJ Monty. We've also got Brian McCormick, an excellent chartist. So many of our guys are really strong in charting, and I encourage all of you to check out marketrebellion.com/Dallas to learn all about what's going to be going on September 21st through the 24th. So check it out, marketrebellion.com/Dallas. All right, there's the lovely and talented Melissa Lee, with my brother Pete, laughing a little bit apparently about the Chinese A shares, or perhaps about Steve Weiss. I'm not sure. ASHR, you'd heard me talk about this one a couple days ago as well. They just keep piling in. Why? Because China's reopening, not all at once, but reopening. And that reopening means more demand for fossil fuels, which is another reason I like that sector. But I like a lot of these Chinese plays. I've talked about my longs in FXI, in KWeb, and in ASHR. Pete was talking about that today with Mel, and he was highlighting the September 36 calls with that index trading at about, 33 and a half. The September timeframe means that these aren't going to decay nearly as fast because they're out there several months in the future. We're coming up on July, August, September, 3 full months, a quarter into the future. Obviously, none of us know what's going to happen for sure in the future, but what I can tell you with certainty is time decay on something 3 months or 90 days or more into the future is very small. Time decay is very fierce on something that's happening this week expiration, next week expiration, the first 6 weeks of an option or the last 6 weeks of an option's life. That's when the time decay accelerates almost exponentially, folks. But when you're out 90 days in the future, not nearly as bad. Pete highlighting these 36 calls, call it a little less, maybe 9% out of the money. You know the drill. I buy at the money, sell out of the money as we rally. So that's the first of today's 3 at 3. If you're new to this and you'd like to learn more, go to marketrebellion.com/get started. That's marketrebellion.com/get started. You can learn more about trading stock, options, about charting, about trading crypto, all of that. marketrebellion.com/get started. Again, just like we will have in Dallas remote, we've got coaches, mentors, and distance learning tutorials that can help you be a better investor. Invest with less risk, control your risk on entry with Market Rebellion and our option strategies. All right, Royal Caribbean, this is way out of the money. So is this just like disaster protection, or is it something that we see when people are worried the swaps market goes crazy? Well, you know that a couple firms have downgraded cruise lines lately. In fact, Carnival Cruise Line got a severe downgrade. And so it's not surprising to see somebody perhaps buying a lot of puts in Royal Caribbean, RCL, which Pete highlighted on the show. It's down 11% today. It wasn't the one getting the downgrade, but nonetheless, it's reacting to it. And perhaps some of those swaps blowing up. When swaps blow up, which is a way that you can protect if you've got bonds and things like that for these companies, a way you can protect is with a swap. Well, if those are perceived as too expensive, many times people will buy an out-of-the-money put as that protection against those bonds. So we've seen that happen in 2008. We saw it in Bear Stearns, Lehman Brothers, General Motors. We saw it happen across the board where bonds were blowing up, meaning that, people were getting killed in their bond portfolios for some of those companies, and they sought protection by buying out of the money puts in the stock, thinking that that was a cheaper protection than the swaps were. And that's something that we see regularly. So again, this one is a put purchase out in September also, so very low on the time decay side. Third and final of today's 3 at 3, well, Advanced Micro, July 78 puts. So these are puts that are 2.5 weeks out into the future, because obviously this is the 1st of July this week, Friday. So that's the first expiration in July. We've got obviously 3 more expirations upcoming, and these are regular July expiration at the 78 strike. They went in the money as Pete was on the show today. So watch that. 78 puts, that's the right to sell. And this one is indeed fast time decay. That is the 78 puts in July. Bang. That's going to do it for us today, folks. I thank you for joining us. There's a little funny billboard of my brother Pete with the Zombie Collective, the NFT that's out there that gives you a lot of cool stuff. But that's the Zombie Collective. You can check them out if you like. I thought that was funny, just the billboard of Pete at the NASDAQ on that 5-story billboard. But I will be back tomorrow. I will be on the halftime report at noon Eastern time. I look forward to it. I'll, of course, be back for 3 at 3 tomorrow as well. Have a great one, folks.